Hello everyone, and welcome back to Explain the Charts. Today is September 30th, 2025, and we are taking a deep dive into Alphabet, ticker Google, which is seeing some significant downward pressure today. The stock is currently trading around $240, down over 1.5% on the day. First, we'll break down the latest news and headlines swirling around the company, and then we'll jump into the charts to see what the technicals are telling us. Looking at the news, it's a classic mixed bag of strong fundamentals versus near-term headwinds. On one hand, Alphabet's financial health is robust, with the company beating Q2 earnings estimates and reporting revenue of over $96 billion. This fundamental strength is a key reason for the stock's massive run-up this year. Furthermore, Google continues to make major strides in the AI space, recently striking a significant AI hosting deal with Cipher Mining, which reinforces its long-term leadership position. However, the primary reason for the current pullback appears to be investor concern over regulatory, legal, and competitive headwinds. This sentiment is causing traders to take profits after a powerful rally. Just 2 weeks ago, on September 15th, the stock soared to a new high, pushing Google's market cap over $3 trillion. So, what we're seeing now is a correction from that peak excitement, fueled by a shift in market sentiment towards caution. Now, let's pull up the daily chart to put this all into perspective. As you can see, the stock had an incredible run starting from the beginning of September, rallying from around $210 all the way up to a new all-time high of $256 on September 19th. That's a massive move in a very short period. Since hitting that peak, however, we've seen a clear reversal and steady distribution. The price has broken down through several small support levels and yesterday closed at $244.05. Today's move down to $240 is a crucial test of the next major support zone. This $240 level coincides with the highs we saw during the consolidation in early September, right before the final leg up. Holding this level is critical for the bulls to prevent a much deeper correction. The primary resistance overhead is now the $252 level and, of course, the all-time high at $256. To better understand the power of that recent bull run, let's zoom in on the period from late August to mid-September. Look at this huge gap up on September 3rd, where the price jumped from around $211 to open at $226. That move initiated a powerful trend, with the stock methodically climbing for the next 2 weeks. This is the rally that is now being corrected. Understanding the origin of this move helps us identify key potential support zones on the way down, such as the gap fill area around $215 to $225, should the $240 level fail to hold. Now let's switch to the hourly chart to get a closer look at the recent sell-off. Here we can really see the bearish momentum accelerating. Yesterday, on September 29th, the stock opened near $248 and sold off throughout the day, closing near the lows at $244. There was very little buying pressure, with each small bounce being met with more selling. This intraday action showed clear control by the bears, setting the stage for today's continued drop. The price is now well below yesterday's low, confirming the short-term downtrend is still very much intact. Any attempt at a rally will first need to reclaim yesterday's low around 242.77 to show any sign of strength. Drilling down even further to the 15-minute chart of yesterday's session, we can see the battle lines drawn. The stock tried to rally in the morning, but was rejected hard around the $251 mark. The subsequent sell-off was aggressive, particularly in the afternoon, culminating in a final leg down into the close. This persistent selling pressure on a shorter time frame is a strong bearish signal. It shows that sellers were active at every level, preventing any meaningful recovery. This is the kind of price action that often precedes a gap down, which is exactly what we saw this morning. So let's bring it all together and go back to our daily chart for the final analysis. Here's what you need to be watching. The most critical price level right now is the $240 support zone. This is the line in the sand for the short term. A daily close above this level could suggest the sell-off is getting exhausted, potentially leading to a relief bounce. However, a firm break and close below 240 would be very bearish, opening the door to a move down to the next support area around $235 and possibly even lower. For a bullish case to regain traction, buyers need to step in and defend $240, then push the price back above the $244 to $245 area, which was yesterday's support-turned-resistance. A move above $245 would suggest a short-term bottom may be in, with a potential retest of $250. Conversely, the bearish case is reinforced by the current momentum and the break of yesterday's lows. If sellers maintain control and push the price decisively through 240, the path of least resistance will be lower. Considering the sharp, recent sell-off, I would place a 60% probability on the price testing support below 240, perhaps finding a floor near 235 in the coming days. This likelihood increases if we see a high-volume close below 240 today. There's a 40% chance bulls defend this 240 level and engineer a bounce, which would be reinforced if positive market sentiment returns or if there's any positive news catalyst for Google specifically. Long-term, the bullish arguments of financial strength and AI dominance remain, but short-term, the technical picture is clearly under pressure. Keep a close eye on that $240 level into the close. That's our analysis for today. Thank you for watching Explain the Charts. Don't forget to like and subscribe for more in-depth analysis.